G'day, it's Tor here from Pro Stock Tips, and today I'll be talking about the controversial topic of gold versus Bitcoin. Now this is gold. It's used in jewelry and electronics, so this is where it derives its fundamental value from. And this is silver, also used in jewelry and electronics. And this is a Bitcoin. Essentially, it derives its value from buyers' willingness to simply pay for it. Obviously, it's simply data on a server and has no intrinsic or fundamental value other than the sentiment of the buyers and what they're willing to pay for it. That's not to say it won't go up and appreciate in value or perceived value, prescribed value over time. Okay, so let's dive into my technical and fundamental analysis of the price of gold. Firstly, I'm more interested in fundamentals. However, I do appreciate the technicals, as obviously the traders are looking at the technicals and the charts to infer a direction on the price of gold. And everyone's looking at the same charts. So essentially, my primary chart that I like to look at, that I've drawn up here, is the price of gold over the past decade or so. So as you can see here, it looks like what was once a previous level of resistance between the 1700 and 1800 level has now, this decade, become a point of support. So it's sort of bouncing upwards of that level, which I believe instills a bit of confidence. It seems bullish to me. It seems like it could be in a a sharp trajectory, and this could be a very long-term cup and handle formation. This downward trend over the past year or so could be a bull flag, and we could see a further move higher. That's what I'd hope for. Otherwise, if it breaks support, then you could see a large move to the downside. However, in this instance, then obviously a lot of mines would become unprofitable, and that would be supportive of the price of gold. So there's less downside risk, but there's plenty of upside reward potentially. You can't say this with a lot of confidence. However, certainly in my opinion, the chart looks quite bullish.
And now let's dive into the fundamentals. As you can see here, the United States money supply has essentially gone parabolic. The potential of this is to dilute or debase the value of the dollar. And keep in mind, this is also occurring with other currencies. The perceived inflation fears could lead to traders bidding up the price of gold. And given that the money supply has doubled over the past decade, we could potentially see a move to 4K gold. And this move could be particularly rapid if gold was to take out the $2,000 mark.
Okay, so do I recommend investing in gold? No, I do not. You can see this is my entire gold holdings. However, I do have over 1,000 ounces of gold, but it's in the ground. It's waiting to be dug up. And that's how I would recommend to invest in gold. I'll be looking at a low all-in sustaining cost miner or mining developer. So, you want a company that's going to be able to produce gold very cheaply. That mitigates the downside risk in case the price of gold does go down. Because keep in mind that gold is an unyielding asset. This isn't paying me any dividends whatsoever. However, when the mining companies start digging up the gold, then that's when you'll see a return on investment. And this is not just recommended by me. That's sort of Warren Buffett's approach. Because obviously gold is unyielding. So that's why a good mining stock would be the best exposure. Also, they're going to go up more if these mining stocks are leveraged to the price of gold. So now, what mining stocks are going to give you this the best value for money? So obviously I'm trading on Etoro as a popular investor. Some good US stocks or good international stocks might be, say, Agnico Eagle, which is merging with Kirkland, one of the lowest all-in sustaining cost producers. They own Fosterville Gold Mine, for example. Newmont Gold Corp, Newmont. So that's that's gold. It's sort of moving into copper now as well, which is great to get that exposure, because you have the safety of multiple commodities. Same deal with Freeport McMoRan, which also has copper and molybdenum output. So that's certainly one to look at there. Now, where you might find some extreme value is in ASX gold miners, or gold explorers. So obviously we've seen some big run-ups in share price with gold developers in Australia. So take De Grey, for example, as an exploration company, huge returns there. Let's say over the past decade, you've had some big mines come into production. So let's take Golden Road Resources, for example. Obviously, as they've undergone that development progress, they've appreciated in value by a large order of magnitude there. So let's invest in the next gold developer is a good thing if we're bullish on the price of gold. So for example, I think Nova Minerals looks quite promising. So they're a gold and lithium sort of investment theme, and they're bringing on a lot of they're doing a lot of exploration, very similar to what we saw with De Grey. As you explore and add more ounces, theoretically the value of the company should go up. So perhaps could Nova Minerals be the next Golden Road? Let's hope so. I have a small investment in those guys. And now if you want some extreme risk, if you're looking for huge returns, then you might be looking at something as crazy as Citigold, which could go bankrupt and you could lose all your money. Or it could go, if gold prices go up and incentivize the development of their mine, then obviously you're looking at a current valuation of $2 per ounce of their resource, which is in the ground. They also have reserves. So certainly if they could actually achieve this goal of going into production within the next 5 years, then you're looking at potentially 100 times return on your investment, with 14 million ounces of gold in resource, estimated resource, JORC compliant resource. So there's certainly some crazy gold stocks. How about Xanadu or Canterbury resources? You're getting extraordinary value per ounce in the ground. However, I'm not suggesting these stocks because I just wanted to highlight some of the most risky stocks that you could pick but certainly exciting ones. And certainly there's a lot of great gold producers in Australia. So you got West Gold, Newcrest. So there's certainly some good gold stocks on the ASX, which is where I like to invest. So that's my coverage for gold stocks. Okay, so now let's dive into my thoughts on Bitcoin. Is Bitcoin going to go higher, or is it going to go lower? Well, at the moment, it's very hard to say because it seems to be in limbo, right? It's come back off some all-time highs and it's trading about 58,000 at this moment that I'm producing this video. So is it going to rebound and head up towards 100k? So that would certainly be my upper price target for this cycle. I think that 100k, a lot of people are going to be trying to take their profits at that good psychological level. So it might be hard to take out 100k. Potentially it could go higher, but 100k for me seems to be a point of resistance, I think. And on the downside, it could be on a precipice, so it couldn't sustain all-time highs. Potentially it could fall off a cliff here. And this is how Bitcoin works, right? Because the people that are in Bitcoin, the reason why the Bitcoin price is so high is because people pile into Bitcoin because they believe that Bitcoin's going to make them rich. They believe, they're speculating. Speculation drives the price of Bitcoin, and the speculation is that it's going to go up in value. When people change their minds, they'll all be rushing for the exit at the same time, and it'll just collapse the price essentially. So you could see a big breakdown all the way with sharp drops down to 20k, which is where I believe a point of support is, because that's a great psychological level for Bitcoin. Is people are saying Bitcoin's never going to go below 20k again in history. So that could be a point where you might want to, if it does get there, then you might want to trade that bounce up from 20k back to 30k, something like that, right? But is that going to happen? I don't know. And personally, I'm not invested in Bitcoin at all. Essentially, I think that the upside reward here just isn't worth it. If it goes up to 100k and you make 50% of your money, I think that the returns can be a lot higher with small caps, penny stocks. That's where I like to try and aim to invest to make those big returns. And certainly you can see over the past decade there has been some small caps that have yielded 1,000 times return on investment. So certainly Bitcoin isn't the only way to make a lot of money. And essentially, you're trying to, do you want to jump on at the end of the run or the start? Because obviously the returns for those people that invested a decade ago in 2010, their returns are millions of percent. Is there the return, that higher level of return left in Bitcoin? Or obviously I would say no, essentially. So if you do want to trade Bitcoin, I'd certainly be wanting to check the news. So what positive news is going to come out, which is going to hype and pump Bitcoin up to that 100k mark. Essentially, we've seen it reach new all-time highs on news such as Bitcoin ETF, Taproot. So positive news flow obviously drives the speculation that inflates the price of Bitcoin. So keep that in mind. You want to see positive news flow for Bitcoin. You don't want to see any negative news flow. It's great to see that China has exited from Bitcoin, so they should have minimal FUD impact. So essentially, seeing as I wouldn't recommend investing in Bitcoin itself due to the downside risk to the price, I would think to invest in something that's going to give a higher return. So how about Bit Digital? So obviously we saw huge returns with Marathon Digital. I personally invested in Marathon at about $5, and it obviously appreciated all the way up to $60 since then, I think. So there's obviously a lot of money to be made in Bitcoin mining. Now, Bit Digital is a smaller Bitcoin miner whose price hasn't really taken off yet, and obviously Bitcoin mining profitability is pretty good for these guys, and they're heavily shorted. So 30% of the float is shorted. So that could be a good short squeeze stock. If Bitcoin prices were to go higher, then we could certainly see a huge move in Bit Digital share price. So that's where I'd be looking for if I was really confident that Bitcoin prices were going to be going up. And if you think that Bitcoin prices are going to go down, certainly like Peter Schiff would suggest. Now, if you haven't already seen it, check out the Peter Schiff debate on Bitcoin versus gold on Kitco News. It gets pretty heated. He even gets angry with Michelle McCory there, which is pretty funny to watch, just due to the intensity of the argument. It was a very fiery debate. And obviously these are much better experts than me, right, that study this the field in a lot more depth. So certainly check out the interviews on Kitco News. Also recommend checking out the Gareth Soloway coverage. So he currently views Bitcoin having potential to go down to 20k. and if it breaches all-time highs again, then it could certainly go up. So he's a professional trader. So great interviews there from Kitco News. Now, essentially, if you believe Bitcoin price is going down, how do you want to play that? Certainly, you could look at shorting, say Coinbase or some of the Bitcoin stocks, if you believe that the Bitcoin prices are going to collapse. Now, as for Bitcoin versus gold, let's get into that. So, sorry about that. So is Bitcoin a store of value? Personally, I don't think it's a very effective store of value. It may be storing its value, but certainly I don't think that it had any value to begin with. So in that sense, I don't believe it should be considered as a store of value. Certainly got a potential to lose a lot of your value very rapidly if the price of Bitcoin was to collapse. So there's a lot of risk there. And in comparison to other stores of value, I would certainly say that equities, the stock market, has a much higher propensity to store its value. So if you check out the S&P 500, for example, you will notice that it goes up. Yeah, it's essentially just gone up throughout history. If it ever goes down, it always comes back up and sets new higher highs. So the S&P 500, you've got companies that are continuously growing and paying a return in the form of dividends. So something like the S&P 500 is a much better store of value, I would imagine. A lot of the proponents for Bitcoin would suggest that there's a finite number of Bitcoins. So the 21 million is the maximum supply of Bitcoins. Now, that's a very good point, obviously, because if there's all these people trying to pile into Bitcoin, as you can see, I'll bring up a chart, the volume of Bitcoin trading and I guess the number of active Bitcoin accounts versus the price shows you that as more people invest in Bitcoin, due to that finite supply, it's going to drive up the prices because there's a shortage, there's a shortage of supply, and there's an increasing amount of investors all bidding for the same thing. So basically supply, demand, it drives up the price. So there's certainly that perspective. Although I still don't believe in that because, that's essentially just going off the popularity of Bitcoin, right? It's just a kind of like a Ponzi scheme. So there's always pyramid scheme. There's always new investors coming in. But this is all based on the popularity of Bitcoin. But I think that's here to stay kind of thing. So, I wouldn't be too worried. I certainly wouldn't be in myself because I recognize it as, I guess, a Ponzi scheme. Like it doesn't make much sense to me personally. But, I do believe that popularity is here to stay. And we can certainly see evidence of that with, I guess, the mass adoption of Bitcoin as a digital asset, essentially. You've got people just dollar cost averaging into Bitcoin, just constantly adding more and more to their Bitcoin holdings and hodling them. You've got more investment platforms that are offering Bitcoin. So obviously when it started taking off, Square got into Bitcoin trading, PayPal, and then you've got, institutional investment or large corporate investments, so MicroStrategy, Tesla. You've got countries adopting Bitcoin, El Salvador as a national currency or as a national legal tender. So there's a lot there to drive the popularity of Bitcoin. The Commonwealth Bank, for example, allowing Bitcoin investments. So, this is pretty substantial adoption. You're constantly seeing advertisement for Bitcoin. So there's no shortage of investment into Bitcoin. But although Bitcoin is very popular now, who's to say it's going to be popular in the future? You can see that the hype is just driving cryptocurrency in general, to crazy amounts. Like, take a look at Shiba Inu coin. Huge run up there. Fundamentally, I think it's completely worthless. Is this currency made up, invented currency? Why should this dog fiend based currency be the future of financial transactions? It doesn't make any sense to me, and it just goes to show the true nature of cryptocurrency investors are just there to make as much money as possible, even if it's not a realistic product or currency, right? Now, also you've got to ask yourself, is Bitcoin going to act as a currency, if not a store of value? Well, I think it's failed at that as well, right? Because you can see, the transaction volume of Bitcoin. You've got, like, say, 10-minute transaction times, and much lower volumes, and essentially the trading is all just trading. People are constantly trading Bitcoin, but they're not necessarily trading that Bitcoin for a real asset. So you're not going and buying a car or a TV. With Bitcoin, you're not getting paid in Bitcoin. So it's not working the same as a actual currency. And I guess if you look at, the US dollar or other currencies, their transaction volumes are higher. They take place instantaneously. So, Visa, for example, is obviously processing much higher volumes of transactions than the Bitcoin network is, right? So in my opinion, there's fatal flaws as a currency. It doesn't make sense as a currency, and because its price is based entirely upon speculation, I don't think that implies the correct amount of stability that you need for a currency, right? It's too volatile. Essentially, there's nothing there to support the price, and it could so, for example, a whale could just drop a whole heap their entire holdings on the market in one hit, which could just cause the Bitcoin price to plummet. Whereas you don't see that happening with any other currency, like other major currency like the US dollar, right? Obviously the US dollar can be used to buy stocks, for example, real estate, and it's the only currency that you can buy, say, your Apple shares, your Microsoft shares with. If you want to buy real assets in the US, you pretty much need the US dollar. So that certainly supports the price of the US dollar or its value. Whereas I don't think that you really have that in Bitcoin, as it's not really being used as a currency, as opposed to a tool to make a lot of money, essentially. And another point I'd like to consider when valuing Bitcoin is that essentially, in comparison to other currencies, Bitcoin is being valued at the, approximately the value of the entire gross domestic product, or the GDP of major nations such as Australia and Canada combined. So this is a pretty hefty valuation for Bitcoin, I would certainly suggest, especially because if you compare the the transaction volumes with the Canadian and Australian dollar, certainly those are some major currencies, and Bitcoin isn't being used anything like those currencies that are being used to exchange real assets. So another point would also be the finite supply of Bitcoin. Well, you could say that you can make the same argument about stocks. Okay, so what about Apple, for example? Apple, the number of Apple shares, is essentially finite. In fact, it's being reduced because they're buying back their own stock, and then they don't seem to want to stop doing that. so it's not just Apple that has, say, a finite number of units. What about other cryptocurrencies? So let's take two examples, right? Bitcoin Cash, which purportedly improves upon the Bitcoin or blockchain network, and has a supply cap also of 21 million Bitcoin Cash coins. And Litecoin, which is also very similar to Bitcoin and has a supply cap. So why are these two coins worth any less than Bitcoin? To me, that doesn't make any sense. Essentially, because if you're just copying what Bitcoin fundamentally is and replicating that, why would you value that any lower than the original? Just because it's a first mover or something like that? I don't see the logic in that. Essentially, I think it just goes to show that Bitcoin or cryptocurrencies are totally worthless, but their price is just a factor of their popularity, essentially. Now, maybe people will pick up on this and they will go, hey, well, maybe Bitcoin and Litecoin are undervalued in relative to Bitcoin, especially if they have the same supply, limited supply, and properties of Bitcoin. Then maybe they should also skyrocket. Perhaps that's in store for those two coins, especially if Bitcoin starts to lose its potential profitability. If it sort of peaks out or slows down in momentum. And if it does slow down in momentum, perhaps some of those investment will translate back into gold, for example. Traders want to invest in a asset which is going up, that they can cash in on. So if Bitcoin starts going down and gold starts going up, well, maybe they'll shift their money into gold. You never know, right? But it is something worth considering. So these are my views. So my view is probably I'm not personally going to go for Bitcoin, but I would certainly choose a gold mining junior, over Bitcoin investments, personally.